Hello and welcome back. You're watching the weekly wrap-up with me, Natalie MacDonald. I'm joined now by Colin Cieszynski of CMC Markets. Colin, in our first item, Russia have raised interest rates as sanctions against the country have been tightened once more. With news today also of the Ukraine PM's resignation, what market response do we continue to note in relation to these events?
So far, we've had a mixed response in the markets over the course of this week to events in the Ukraine. It seems some days the markets are worried about it, and some days they're not. As we move into Friday, we are seeing a bit more concern about it, and also the interest rate increase in Russia. And so we're seeing that today we have European markets are pulling back a little bit, as well. We have the Dow down 100 points to start on the open. What we are seeing though is that tensions have remained high. Things have not gotten any better over the last week, and it remains a risk facing markets as we move through the rest of the summer.
The Canadian dollar was lower on Tuesday as US inflation released this week highlighted gradual acceleration. Was this figure enough to bring forward expectations of a rate hike?
This particular figure was not enough really to bring forward expectations of a rate hike. But that being said, generally speaking, expectations are starting to head that way. Where as we move into next week, we should get a lot more clarity on this. We have payroll numbers as well as an FOMC meeting and U.S. second quarter GDP. So those numbers are likely to overshadow the inflation number. But it is important for us to remember that as we see a combination of employment improving and inflation rising, does put more pressure on the Fed to start normalizing interest rates.
It's a good week for Asia as Chinese manufacturing PMI hit an 18-month high this week, sending Asian stocks soaring. From one commodity-centric economy to another, in your view, how important is this figure?
It's quite significant. We've seen a real rally in Chinese stocks this week. As well, we've also seen it in base metals, in copper and zinc and aluminum. So the sentiment towards China is definitely starting to improve as signs that their economy is turning around start to emerge. So this is a quite significant for China and also for resource-based indices as stock markets and currencies.
Lastly then, Colin, with so many off-calendar events dictating market movements at present, what on next week's agenda could rebalance that correlation?
Next week is a very busy week for scheduled news, and that's likely could start to dominate. This week was dominated primarily by political developments as well as earnings news. As we move into next week, it goes back more towards economic news and monetary speculation, because we have a flood of earnings reports coming out again from around the world, but we're starting to move from the top tier market moving companies down into the second tier, into the mid caps and the broad caps. We get more reports. They affect individual stocks, but they don't necessarily impact broader markets to the same extent. We also have next week a number of major announcements, particularly in the United States. We have a FOMC meeting on Wednesday where the street's expecting another $10 billion taper. As well, they'll be looking for comments on monetary policy going forward. Are there any signs that they may move up interest rate hikes or starting to work down their balance sheet? We also have employment numbers coming out next week. We have on Wednesday we have ADP payrolls, on Friday non-farm payrolls for the United States, two big releases there. Plus on top of that, on Wednesday we have U.S. second quarter GDP. People will be looking to see how much of a rebound did we actually get from the first quarter, and then on Friday we get U.S. manufacturing PMI, with people looking to see has this momentum continued into the summer months. So it's a huge week for economic news, and that's likely to have a big impact on trading.
Colin, thanks very much for your comments, and viewers, thank you for watching. From me, it's goodbye for now and have a great weekend.